The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Steve. You're right, Steve.
Morning. Hello, even.
Yes, you can say morning, Steve. It's fine.
Well,
someone's listening to the podcast in the evening. They'll understand, I think. They won't get too confused. What? It's morning? What? Has the clock's gone back? But yeah, Peter and Paddy are not here because of Cheltenham Festival. They're not going, watching the racing. They just love horses, They've always loved horses. We know this, and so that's where they're gone. They help to muck out the horses during the Cheltenham Festival, They're
kind of like the train spotters of horses, aren't they?
Yeah, they love them. They just love stroking them. I mean, they volunteered to muck out the horses every Cheltenham Festival, and ever since they were small children, both of them, they've loved horses. Absolutely loved them. They're obsessed with them. And that's how they met. Not a lot of people know this. They met at the Pony Club when they were kids.
Especially Paz. He loves feeding the horse.
He does, yes. Loves feeding the horse. And they're obsessed with horses. Like I said, if you go to their bedrooms, there's pictures of horses everywhere. Absolutely everywhere. And that's why they moved in together, because they share the love of horses. And
that's why Pete watches My Little Pony every time he's with us.
Yeah, he's obsessed with it. Just knock it off, Pete. But the trouble is in Croydon, where they both live now. There's not much room, so they've only got a Shetland pony. But they go to the shops and that. 'Cause they're quite eco-friendly as well. Two of them together, the little Shetland ponies. And the funny thing is, one of the Shetland ponies is called Pete. That's Paddy's Shetland, and the other one is called Paddy, and that's Pete's Shetland pony.
It's confusing. Nice. It's confusing sometimes, isn't it?
It is. When they're calling each other. Yeah, the horses come. Do you know what was insane? I watched yesterday. Did you see that rally that Putin put on?
Yes. Oh, do you know what? Like, the world must watch that and go, this is to a different level, isn't it?
Yeah, demented. I mean, you know what? Like I said before, he is a gangster. In fact, he's probably the biggest gangster in the world. The biggest. Because if you look at gangster films, they've got an entourage of a couple of guys, maybe even drug cartels. They've got a couple of hundred people, who are armed, even the biggest ones, and no more than 100. Putin's got an army of hundreds of thousands, and he's a gangster. So basically, he put on this address at the stadium, at the Luzhniki Stadium. They had apparently 80,000 people there, 200,000 outside. Now, a lot of the people there said, they told the BBC apparently, they worked in the public sector and have been pressured into attending by their employers. It was a day off, they get paid for it, they have to go. One man who works in the Moscow's metro said he and other employees had been forced to attend the rally. So
that makes sense.
They're all waving flags and stuff. But how insane is that? You're just standing there. You imagine someone else, the country, doing that. Another country, like Boris, right? Just celebrating, standing on a stage. It's like the half-time, entertainment, isn't it, at the Super Bowl? Just standing on and say, we are here to celebrate taking off. Imagine Boris there, taking over of a different country, killing other. Because that's what they're celebrating. They're celebrating the annexation. They call it the annexation of Crimea. Basically, they went in there, killed people, took it over. That is gangster level. At another level, isn't it? Gangster level that. So basically, they stand around there and say, yay! It's like one gangster gang taking over the turf of another gangster gang, celebrating, and that's what they're doing. They're talking about countries. He's there, yes, we've killed people. Can you imagine doing that in this country? Like Boris standing up saying, we've taken over another country and killed people. And they're all celebrating that. How mad is that?
My jaw was open, watching that. I was going, what? And do you know what? I did wonder, because originally I was watching it, looking at the audience, going, is this real? Have they done some CGI clever stuff here and put people in the stadium? I was like, no, it's actually full. But that makes sense because everyone's losing their jobs in Russia. The only people who aren't losing their jobs are the public sector. So actually, they're probably quite scared at the moment. So anything that's going to risk their job, they're probably like, yeah, we'll do that, whatever. Yeah. Wave a flag for an hour and watch Putin talk rubbish? Yeah, fine, we'll do that. No worries.
Otherwise, you have no job. Oh, okay, yeah, so you have to look enthusiastic for the camera. Okay, good.
Do you know what? And this is me from my technical side. I was looking at that and all the rigging and the lighting and the sounds. I was looking at the brand. I was like, all that lighting probably isn't even Russian made. So in a couple of years' time, they're not going to get parts or that kind of kit. They're probably not going to be able to build those kind of things because they won't have the stuff in Russia to get.
That's the supply chain issues. I know. Massive supply chain. But I mean, I wonder where they are at the state because you see different things on the news. The supermarket's been empty, and I think is it that bad? Is that extreme version? Because it must be biting now, surely. You can't. I've heard people, on the news and radio saying I can't pay for stuff anymore. In fact, this blogger who's anti-war, and she did a blog and she said I can't get any payments anymore. So, if anything international is hard, you can't get paid. So even advertising is, and from their blogs and stuff. So I wonder how hard it's hitting and when the people start saying, because you've got to give it to people, they're so brave, protesting in Russia, aren't they? Because you can be locked up, you don't know when you're coming out. It's like, it's nuts.
This week, that woman a producer of the TV programme who held that sign up on the live broadcast, I was like, wow, that is massive guts. I honestly thought we'd never see her ever again. I thought, that's it. She's gone. I think that's very clever, though. I mean, they wouldn't care, Russia. They're killing people, they're killing kids in broad daylight, in front of global eyes. But I mean, I thought that. I thought, will we ever see that woman again? And luckily, I think they thought, no, just to show you, we're not a totalitarian regime. We're going to let it speak afterwards. They kind of had to, didn't they, really?
Yeah. Anyway, George, you know what's nice? Was it nice to have a 19% rally in XP Factory Friday? That was nice. Did you see that? Did you ever look at the stock market, Steve?
No, do you know what? I haven't.
You didn't?
Did it have a 19% rally?
Yeah. Oh, yes. Yes. So I put a sort of poll out there saying, have micro-cap, small-cap growth hit a bottom? Growth stocks as well. 56.4% said yes, and 43.6% said no. It's almost like a Brexit announcement there, outcome. But you've got to understand, right, the liquidity gets affected in the micro-caps and growth stocks very quickly. And they come back very quickly. So if we've, even if it was a recession, they come out fast. I mean, they'll be, I
didn't notice XP Factory, but I have been keeping an eye only because a couple of friends have recently invested into some funds in the Vanguard. Even that rallied on one day 2.34%, and that is just unheard of, isn't it?
Yeah. Do you know why that is? And I think this is the bottom. Do you know why it is? Why they rallied?
Go on.
So Jerome Powell. Do you know Jerome?
Down the pub, Jerome, or
no, Jerome.
Different Jerome, right?
The head of the Federal Reserve.
I don't know. I don't know him. No.
That is like the Bank of England in the US, but it's obviously a lot bigger than our Bank of England. So they've said for a while he's behind the curve on trying to tackle inflation and rising interest rates. They haven't risen it 3 times. We've done it over here now, Bank of England. In America, they haven't done it yet. And everyone's saying, "What are you doing, Jerome? Jerome, put the rates up, man!" And not everyone's saying that because it's historic lows. But they've said they are going to put them up. They have put them up about 0.25, I think it is at the moment. And he's going to do a series, about 7 rate hikes. And so, whoa, what? You've gone from before being asleep on the job to just waking up. Right, what? Inflation's here. Right, quick. And but of course, but people saw that as quite good because inflation is going a bit mad, And also the uncertainty of not knowing what the Fed would say. The markets rallied. So that's very odd because interest rates, obviously rising interest rates, will stifle growth a bit. It'd be more expensive for companies to hold debt. It'd be harder expensive to acquire debt as well. So everything is, you think, well, why would that go up? And it's just, I think, lots of things. First of all, the uncertainty where we're going. He's tackling inflation. There's also, I think, some soundings, wasn't there, about more positive soundings about the war. Their discussion points are apart. They're coming closer, I think. Zelensky said that he doesn't want to join NATO and all that stuff. So I think that's good. And to be honest, I don't know if you've seen, Russia don't seem to be making that many advances now. They've stopped. They realise, talk about kit. I think most of their kit hasn't had a run out for 30 years. And it's, did you see that guy on Twitter talking about tyres? And the tyres sort of perishing if you're not used and maintained. But he's saying most of their trucks are ground to halt, stuck in mud and all that. They can't, they're rubbish. They're old kit. But I think...
Well, also, they've got to get through, quite marshy areas, and unless they stick to the main roads. And we all saw the traffic jams on the main roads.
Stick to the main roads, lads.
Stick to the main road, yeah.
Don't go on the moors. I love that. It was one of the first films that stuck with me, American Way from London. I
used to love that as a kid, yeah.
Yeah, when they went to 2 American tourists in their Yorkshire pub. And they were everyone's getting on nicely and talking nicely, and he pointed that 5-pointed star on the wall. He said, what is that there? And the entire pub went quiet. He said, "You've got to leave. Leave now." I said, "You can't send them out now, not in the moors." And so stick to the path. Don't go in the moors. And that was excellent. I watched that so many times as a kid. But but anyway, the Fed, right? So I think they are tackling inflation. They are treading easy path. So it's funny you get a rally like that. The entire American markets rallied strongly on that announcement, which is counterintuitive, really. But that says to me the market was trying to find a bottom. Uncertainty is the biggest thing, isn't it? If you know what the interest rate's going to be, you can plan and deal with it. If you don't know what they're going to be, anything in life, isn't it? The biggest fear the markets have is uncertainty, not knowing. You can't plan. Businesses can't plan, So when that uncertainty is removed, then you have something to play with, So that was an odd rally, and I thought that signified a bit of a market bottom, because all the markets have been selling off in America. I think in bear market territory pretty much. But I mean, I think now we may have seen a bottom here. I mean, it'll be volatile. Yes, it'll be volatile, but I think we've seen a bottom. So that's why I put that survey out. And I don't want to shoot myself in the foot there. I'll probably sink again next week, the markets. But I think stock market, especially micro caps, I think we're going to rally from here. Like I said, XP Factory, I don't know what happened there. It literally been grinding lower, and then it just bounced 20%. And someone said there was a seller in there, constantly selling. They've obviously stopped. So when that happens, obviously the downward pressure is released, and any buys pushes the... if there's sells on the books, of course, the market makers, they have to keep marking it down all the time to get buyers in. So I think once that's removed, it just jumps, a little bit of buying volume, and it springs up. So it's nice to see that, because I've got a decent chunk in XPF, and I'm really excited about it.
It's only back to where it was...
Yeah, I know,
but so ago, but still, I'll take any win at the moment.
Yeah, but when you see a strong rally like that, right from a bottom on a strong day, it generally signifies it may go sideways for a few days, but like any rally, it starts with a big up day on the volume, and then it goes sideways a bit. So I'm hoping this now starts. It's the rally off the bottom there. Yes, and also I had a quick chat with Richard Richard, CEO of XP Factory. He's very happy. Obviously, can't say anything that's not been publicly released, but I just said generalizations. Very happy with business. It's very good. He's very pleased with it. He said he's really peeved off for the share price, but he can't do anything about that. He said, and knowing we are going so well, the business is going so well, the share price is grinding lower there for a while. It's annoying, but you can't do anything about it. He said, all we can do is focus on the stuff we can focus on, and that stuff is going really well. So, but you know what? It'd be nice to get an update. But in this environment, it is like peeing in the wind. There's no point. It just come back in your face.
Yeah.
It did that a while back. They said it's a good update. Went up, come down the next day. What the heck? It is like trying to canoe paddle against the current, isn't it?
Even Trufin is pretty much back to how it was. That spike didn't really last very long, did it, from last week?
It's annoying, yeah. Do you know I was watching it last night, Steve? Actually, very good, worth watching. It's WeCrashed. Have you seen that?
No.
On Apple TV. WeWork, the offices. No?
No.
Have you never... I suppose they're in bigger cities, Steve. In the bigger cities around the world. There's lots of them.
Is it like Regis?
Well, no, it's an upmarket. It's like a communal sort of offices. They're very quite open plan.
We do have them in Cardiff, but we have independent ones.
Okay, but they're a copy of WeWork, but they have little bar areas, coffee areas, all free. Yeah. Well, this guy Adam, I can't think of his name. The guy who found that Adam, and he's an excellent salesman. Tried for ages he's called himself a serial entrepreneur. But he tried ages, and a brilliant salesman, really pushy. Almost if you look at his story, you think he's destined for success. He didn't stop working, trying, but he's also a bit of a salesman, and he chanced his arm. He started WeWork, and it went to a $46 billion valuation. Then it started crashing because stock options were in his favour and all the stuff. And of course, the pandemic shut everything down. People weren't going to offices. So it went, and so it was very highly valued. But he's very good at sharing his vision, like you say. But I mean, you've got to be careful with CEOs. If some are too salesman-y, be careful. They've got to be a little bit salesman-y, but not too much, So if they're too salesman-y, you think, hang on a sec, we're not actually getting the true reflection of the business here. You're talking about vision of the business, which is not real, So, but it's very good. Apple TV, WeWorked. So worth watching that. Yeah, it's very good. Is there anything else on Apple TV worth watching?
Do you know what? My subscription has actually ended on that. So
right. Cause we started watching the morning show, which is good. But me and Megan start watching stuff. Then she goes on her phone, or I go on the computer. And we say, I got to stop this. We start all the time. It's annoying, but it's good. So I started looking at other things on there. And apart from WeCrashed and things, I tried 3 other things. And this is rubbish. Just turn it off.
I don't think the content is quite there yet. That's why I kind of ended my thing. I might go back to Disney Plus though, because
What?
I ended that. Well, because there's quite a few.
Is that for your kids?
No, because they do quite a lot of adult programs on there as well, obviously.
Adults,
but
oh wow, I didn't know they did adult programs.
The Beatles documentary, I'm quite interested. Everyone's been raving about that. Actually, it came out at Christmas. But yeah, I think
is that on Disney?
Yeah.
Okay, I look at that. Yeah.
It's supposed to be brilliant, like really good. But yeah, no, I think it's one of those things. It's like it's not like Netflix, where Netflix churn out the content. You know, you could literally not watch it for a couple of days and there's new content on it. Whereas I think
I don't know. Do you know what? I've been looking at Netflix recently. I can't find anything on there. Literally, I'm not technically an idiot. I can find stuff on there. You know, it's not hard. I can scroll up and down the menu, but I find it really hard to find anything decent on there. What is on there? I mean, I think, what's going on?
To be fair, I probably watch stuff that you wouldn't even consider watching, though. So
go on, what?
Well, I don't know. Just what am I watching at the moment? One of Us Is Lying. Like you would hate that.
Yeah. Well, I watched that Anna thing.
Oh, Inventing Anna, that was really good. I like that.
I just think it's overacted. It's too dramatised.
No, but that's how she acts. That's not her overact. I thought that when I first watched it, I thought the accent's terrible. Like, what's she doing? And then you watch real footage of her, and that's exactly how she acts.
The actress from that is from Ozark. She's brilliant.
Yeah, well, that's the thing. Like, I think you think she's overacting, but she's not at all. Like, go and watch original footage from like the courtrooms of her, and she's literally got it spot on of how she is in real life.
Yeah. Anyway, watch WeWork. It's good if you can't Apple now anymore. But do you know what it made me think of though? Right, when it comes back to investing, first of all, because it starts off with a bit of a board meeting, and they pull him in and rein him in, and I won't tell you what happens, but he goes nuts. But I think first of all, right, and this is how he set up, because he tried loads of different businesses, like collapsible female heels on shoes, so you could have a flat as well as a thing, you know, or a crawl mat or something like that for babies. He tried everything. And he met Anne Hathaway, plays the thing. And said, you've got to love the business you're in. You've got to, you have a passion for it. Do something you like, you know. And I think that's true with investing as well, because you are investing in businesses, you know. And you will research them more if you quite like them, you know, or you quite like what they're doing, or you can take interest in them. Because and that's what people mistake. As a shareholder, you are a part share owner, you know, owner of a business. So try and get to know the business. Don't worry about the stock price too much if the business is doing well, because what is the stock price? Nothing really. It's a price tag, isn't it? It changes every day. So literally, it's a mad pricing system. It really is. Change price, change. Just focus on the business. And also what I think is very important when you look at WeWork, what business do you own shares in that is scalable? What's the most scalable business you own? I mean, you can scale globally, you know, at not much cost once the concept is done and thing. And I think, look, think of your portfolio, Steve. Which companies do you own there that you think are globally scalable? They can literally be massive, you know, can be used everywhere, or the products can be done, or it'll work around the world. What do you think? Which one in your portfolio?
I'd say pretty much all of them, to be honest. Like, what have we got? I've got Polarian. Obviously, that could be global.
Yeah, exactly. Massively scalable. Just the bloody FDA. Just get out of the way, guys. You're messing the whole thing up, you morons. Just tell them that. Give them a call. I'm a shareholder. I know lots of shareholders. You're messing the whole deal up, guys. Just get out. Just put the rubber stamp on it. Yeah, we all know it's good. The guys at Oxford University are using it. He's a professor. What are you?
I know.
You know,
why is that taking so long? Like, well, we know why, because they're just so busy. Just good to stamp.
Say, listen. They should just say, look around the world. Look at the guys who are using it, right? Oxford University, one of the biggest places in the world are using it. Medical institutions, they're all using it.
And they raved about it on the news, didn't they? When they had that news article.
Well, they're all sort of raving about it. There's like over 100 sort of peer-reviewed papers on it. You're thinking, FDA guys, just stamp the bloody thing, eh?
Do you think, like, funny enough, I was thinking about them the other day. I was looking at my portfolio, and I think you were saying that we thought there might have been some, and this is obviously not true, this is just speculating, that whether they were delaying it because they wanted someone else, one of their mates within the FDA, to bring out something similar. And you think, is that actually happening? Because
I spoke about it. Richard says he's got to be careful what he says about the FDA, you know? because you're going to be working with them because there's lots of different indications.
It's a bit like a Russian talking about Putin.
Yeah, it is. Well, yeah, exactly, it is, the FDA. And they're going for different indications as well. So this one is for lungs and all that stuff, but there's different, they want to work with the FDA for a long time. So they want to get on, Richard did say it's like having the extended family around at Christmas. You've got to be nice to them. You don't want to spend a lot of time with them. They don't really want to invite them around, but you've got to be nice to them because you're going to be doing it every Christmas. It's that kind of thing. So, but he said, I get the impression they were phenomenally overworked, and also, anything that they had a query on, which Richard said we've answered the questions they've come back with mainly, but there's some tweaks on some of them. We could have literally had like an hour meeting and sorted that out. But so that it wasn't any big deal. And so they said they're phenomenally busy. Anything they had a query on, they just haven't got time. You imagine it's something like being a single business owner and their phones are ringing off the hooks. You've got to serve customers as well. Let's go back to hairdressing, right, in Cardiff. Let's say, it's one-man hairdresser. You got, 10 guys queuing there. People putting their head in. Is it mice with their son say, how long are you going to be? Okay, the phone's ringing. Essentially, and you won't pick up. Oh, you pick the phone and say yes, and you try and get them off as fast as possible. Any queries, just get them off. That's it. They're so overrun, they just got to crack on. And they think, I can't order that. No. And and also there is that thing about during COVID, anything that would create more dwell time in hospitals were knocked out. They're thinking, anything that would deal with the COVID problem without people going to hospital, they would fast track pretty much and. I don't know, but yeah, it's very. Anyway, that's Polarian, very scalable, globally scalable. Anything else, Stephen?
Let me just quickly bring up my portfolio again.
Yeah, how many shares do you own, Steve? You can't remember your portfolio.
Well, no, but just remind us.
Just remind yourself.
Right. Well, we'll go into the detail of that. So obviously, TrueFin, that software obviously can be used in Cardiff. That can be used. That easily can be used worldwide.
Yeah, I thought that last night.
Gfinity, although I don't think it will. Well, it kind of is global, I guess, but it is still very UK based, isn't it? But that's definitely scalable. Obviously, XBS Factory, that could all it is in Europe, isn't it?
The franchises are easy. Exactly, that's part of it. It's very scalable.
In fact, they're in America as well, aren't they? The franchise.
Yeah, they got 2 in America yet, but. In fact, I don't think that's a priority to them because the franchise is nice, but they don't make as much money. They don't make as much money. It's less capital intensive. You don't have to spend lots of money on it because obviously the franchisees owners pick up that cost and everything. They'll pay everything. But it's very easy to scale franchises with very little effort, So,
Here's a question. So, although I think it can be, I don't think it will be. So, GTEC with their green hydrogen, then I know that's obviously a worldwide thing that's going to happen with the climate changes. But are they more focused on the UK or?
No, yeah, they're going to Europe as well. But that is, I think, is very scalable because essentially. They can consult using their IP software and stuff and location accuracy software. They can pick up and tell people where it is. They get a cut of the equity on every project there. And of course, it's just ongoing consultation fees, so it's recurring. It's very good actually. In fact, there's a note on. Where I see that note on GTEC today? It's in there undervalued. Where is it? Yeah, but I think it's very scalable. But I mean. Traditionally, in fact, WeWork was very scalable, but you wouldn't think it would be, but it was around the world. But again, it's very capital intensive because they had leases, subleases of buildings, or they used to own them. But where's that thing? Where's it? Here we go.
I'm hearing a lot about hydrogen on the news at the moment this week.
Yeah, it's expanded. Well, the EU plans to quadruple green hydrogen production now because of the gangster in Russia.
Yeah. So here's a question for you. I'm not sure if you sent the article. If I think it was you sent the article on Twitter. The thing about the national grid converting a percentage of our gas pipes to hydrogen. How would they do that? Because at what point can you switch that over? Because the other end is going to need to be.
I think they're going to mix it. They're not switching over initially. They're mixing it. Apparently, you can mix hydrogen. I don't know the technicalities of it, but just
mix with gas.
Yes, hydrogen with gas.
How does that work?
Well, I don't know. I'm not an engineer, but that's what I'm thinking. If the National Grid is saying it, I'm assuming they've done some research. I don't know. Imagine if someone asked, "Can gas?" At a press conference, "Can gas and hydrogen be mixed?" Then, one of the guys looks at the other guy. I don't know, actually.
Give it a go, shall we?
I don't know if it can, actually. Good question. We haven't looked into that. But you said you're going to mix it. Yeah, we did say that. Yeah. We haven't actually looked into whether it works. So,
Hang on, I'll quickly Google that.
yeah, let me have a look. Oh, yeah, imagine that. Google that. Yeah. No, it can be mixed. It says here on the website. No, in fact, that's our article. That's our article. I'm googling. Reading his own article. No, sorry, ignore that. That's I did.
It sounds like almost putting unleaded into a diesel tank, doesn't it? But clearly it can be done.
Making plans for hydrogen backbone across Britain. They say as Britain works towards reaching net zero by 2050. Hydrogen is one solution of decarbonising. They plan to let's look. Mixing is it? Repurposing around 25% of the current gas transmission pipelines. A 10-point plan. So, I think they're just get a big pot and mix it up, But do you see the guy in charge of it? He's called Anthony Green. That's the guy. He's the hydrogen project. Anthony Green. So perfect for green hydrogen.
Or as Pete said, not perfect. Mr. Hydrogen would have been better.
Mr. Hydrogen. Yeah. But yeah, so that's scalable. But I thought as well. I did think Satargo is scalable hugely, I mean, just software, isn't it? It's easy copy and paste, isn't it, pretty much?
Well, yeah.
What are you doing there, Steve?
What do you mean what we're doing?
You seem to be doing distracted then. You were doing something.
No, I'm not doing anything.
Okay. Yeah, no, I mean, playing, absolutely. I mean, they're all things, scalable, but put it this way, Trufin, for example, right? Even on that deal with Lloyd's, they're saying, the broker's saying, 20,000 customers, £100 a month subscription. They're saying that on its own, that deal with Lloyd's, but it will get bigger than this, is worth about 163 million. Stargo on its own. So that's almost 3 times the value of Trufin on its own. And yet Trufin's got 4 other companies. Hey, Steve? Steve, you're not seeming enthusiastic about that.
Well, no, I've heard this many times before. What do you want me to do?
I haven't said that to you before, have I?
Putin rally?
No, yes, I do. Trufin, Putin. No, but but I've said that before. I said it's worth the same as Trufin. This is 3 times the value on its own, Steve. 3 times, Steve. Steve!
I'm very excited. I'm not sure what
Stephen! I want you to run around your neighbourhood saying, yes!
I'll save my excitement for the live podcast next weekend.
When you run around, so Steve, you're all right, your neighbour says, look at this broker note. 3 times the value. 3 times. You're all right, Steve.
I'll pretend you haven't told me, and I'll bring some party poppers and things for next week. Okay,
I'll do it again.
And tell me again, and then okay. I'll go absolutely crazy mental.
Okay, this week, last thing I just want to tell you. This week on the podcast, on the webinar, on the Share Pickers Investment Club webinar. Got very excited, I got to say, in the XPF channel on Friday. So finally, some sod who's been selling it stupidly is out. It's rallying, yes! Because, look at the valuation now. It's getting a bit silly. But on the webinar, I'm going through, starting again now, all the videos on my website and refreshing on a weekly basis then. I'll cover them on the webinar, then put that video, special record on the website. So you get for catch up there.
Is the club still open at the moment?
Well, it's open for renewals for existing members of their.
So you've closed for news now?
Yeah, I'm not advertising for it. No, do you know what? The admin, the admin's a nightmare. It's an absolute nightmare. You realise, because I sent out an email to people, and do the webinar, and I said about the chat group. Listen, you have to register for the chat group because we had an ex-member get in there, and he was just creating havoc, just deramping and just being a bit of a troll. And
is this the classic person?
Yeah. And kicked him out, changed his name, came back in as an Asian man.
Brilliant. How did you work out?
Because basically, I clicked on his thing, to message him, saying, "What are you talking about? You registered?" And his old, DM history came out. It's you maniac. Give it a rest, will you? Just kicked him out. Well, you can go back in. Get out.
How does he get back in?
It's like a drunk person really causing trouble in a pub. The bouncers
changes his shirt.
The bouncers check him out. Change his shirt for handle. Come in through the back door. What did we just threw you out? Get out, you fool! just throwing drinks over people in there. Hey, get out, you maniac! And he just comes back in again through the window or something. How
does that work technically? I thought if you kick someone out.
It was a temporary kick, I think, but and now he's banned, full on ban.
Is he still a member of the club though?
No. But it's registering and all that. People are renewing. It's an admin nightmare because I do the webinar and I send an email out hoping people read it. The email because I'm the same. I read the top 2 lines of an email. If it doesn't catch me, I'm gone. So, but I explain about registering and I say you had 3 weeks to re-register for the chat group. The majority of people did, but I'm still getting emails saying I can't seem to access Discord. I said, well, yeah, I talked about it last 3 weeks on the webinar and in the emails. Oh, right. Sorry, I didn't see that. Ask me loads of questions. It just takes loads. I literally been sitting emailing every day. Loads of emails. So yeah, it's a nice size.
You need to send an email saying you will be kicked out of Discord for the
I
top
did. No, I kicked everyone out. In 3 weeks, and I kicked everyone out who hadn't registered. And then it came as a surprise to them. I mentioned it on Discord, mentioned it on email, on webinars. I've been kicked off. I don't understand why I've been kicked off. What? So yeah, but the admin's been a nightmare this week. So I can't. I'm not going to open it all year because it just becomes a nightmare. I'm ground down in the admin side of it and not doing the stock side of it.
I thought Megan, your wife, did the admin side.
Yeah, she did. She does try now and again, but I get caught up in it. Then I can't let it go. I got to keep cracking on through the emails. But anyway, So this week I talked about the lesson 1, the most important lesson of all, Steve, when it comes to investing. What is it, fella? Because obviously you watched the webinar and watched the thing.
No, I didn't watch the webinar this week. Do you know what? I do go to the webinar every week, but I did not do this week because where was I? I think I was in London. Yeah, I couldn't do this week.
Do you know what happened? I sent out the email for the webinar link, about midday I tried to. And I put big bold letters. Join this using this link live at 6 p.m. or it's on the website later if you can't catch it live. And every time I send that out, I get 1 or 2 people clicking that link straight away. It's midday. I said, I'm not there yet. It's big letters, 6 p.m. Every week, people click on it. I click on that, yeah. All right. He's not there. Where is he? Just read the email, please. Just read it.
Do you get notified when people go on then? Do you?
What?
Do you get notified when people do that?
Yeah, you get emails. Someone's joined the webinar. I thought, it doesn't start till 6 tonight.
It's probably me, to be honest.
Just sitting there for 6 hours. So he's taking his time, isn't he? Just read your email. But lesson 1 was I think not the most exciting. I always say this, not the most exciting topic, but I think the most important. Steve, do you know what is it? What is it, fella? What is it?
Research.
Oh, I thought you had it there. And you started off with
risk. Risk management. Like, do you know what I was going to say? Risk, but yeah, risk management. Of course
it is. And as I just point out, I'll quickly go through this. And I say, what is risk? When I talk about risk, I talk about risk to your capital, to your money. And the question I always ask, and people say, investing is gambling. And I've asked you this before. I said, Steve, is investing gambling? What do you reckon?
It's reduced risk gambling.
Yeah, well, the definition, right? It is gambling, yeah. The definition of gambling depends what stocks you're in. Some is out-and-out gambling. The definition of gambling is the activity of risking money on the result of something, hoping to make money, So the result of an investment or a game or horse race. So it is gambling. And the only difference is, everything's about probability in life, isn't it? And the old analogy is, I use, if you're across the road with your, eyes blindfolded, blindfold on, earmuffs on, a busy road, cross that, good chance you get knocked down if it's a very busy road, Now, if you just take those off and look around and be a bit more aware, good chance you get across the road. And it's all about odds. And probability of success against. And with gambling, right? Like Cheltenham Festival right now, you go there, betting a horse, the odds are set. 8 to 1, 10 to 1, 9 to 1, what are they, 5 to 1? There's odds against. So 5 to 1, for example, every time you gamble on a horse, 5 times you lose. One time out of 5 you win, pretty much. Or 1 time out of 5 you win. So you can do this with gambling. So there's known risks and unknown risks. If you can tell me any known risks, Steve, I'll be very proud of you. No, you can't do anything about the unknown risks. They're unknown. It's like you're walking on the street there, and
are we talking about analogies now, or actual?
Anything in investing? But it's like unknown risks. Like you're walking on the street, and a frozen shard of urine from a plane goes through the back of your neck and kills you. You wouldn't have known that was happening,
No.
But when you cross the road, you know there's a risk crossing the road. So that's a difference between a known risk and unknown risk, So stuff you can prepare for, stuff you can't. So if you just deal with the known risks, then you increase the chances of success or probability on your side. And I'd come up with 6 ways to reduce known risks and therefore increase the probability of success in your portfolio. Number 1 is quite easy, really. What do you reckon, Steve? Anything at all? Any idea?
I wish I watched the webinar now.
Yeah, I wish you watched. Yeah, I wish
I watched.
I wish I watched. Yeah, I wish you'd watched as well. So number 1 is exposure. Yeah. I mean, you're exposing people to the outside world, Steve. Exposure.
Yeah.
So essentially, the less stocks you own, the greater the risk. All right. So and understand that. Some people have way too many, and you can't get a lot of reward either. The other side, but you've got to take on a bit of risk to get some reward. Now, the risk you're willing to take on, it's not equal to the amount of reward you get because you have to look at other factors. But always look at that. If you're owning one stock and it drops, and you take a 50% knock, that's it. The value goes down by 50%. If you own 10 stocks and one drops by 50% and they're all equally weighted, you have the same amount of cash in each, it's only 5% knock. Because it's 10%. So that's kind of diversification. Second, fundamentals. Business improving. Look at growth. Look at value. Look at cash. The biggest risk for any company is liquidation, going bust. Why does that happen? No cash, no access to cash. Generally, on equity markets, companies can get access to capital. That's where they're more highly valued because they get access to capital and they can grow faster. But also debt. If you're swimming in debt, it's a problem. I want to say yes. Deterioration, yes. And the next one, what's point 3? Oh, yeah. So essentially sectors. If you look at sectors, isn't that? I see people on Twitter all the time ramping oil and gas stocks. They're exploration. I'm talking about, and they're very high risk. Very high risk. If you're going for wildcat drills, it's like it's pretty much 5 to 1 chance, 10 to 1 sometimes of you having success. That's craziness. So 10 gas stocks or 10 oil companies drilling for oil, one of them will get success. Now imagine that in your portfolio. That's nuts.
Not the best odds, is it?
No. And also clinical trials, pharmaceutical companies. So when you have to get to FDA approval, you have to go through clinical trials first for new drugs. The chance of getting from preclinical through to commercial success, 7 to 1 if it's including cancer drugs, or 5 to 1 outside that. Again, the odds are against you. Don't go for that. The odds are against your success. That's crazy. It's not worth doing. Again, next one is geography. In fact, look in Russia. A lot of stocks in Russia at the moment involve oligarchs on them being shut down. If you own companies, I'm not saying don't do it. I'm just saying if you own companies in risky jurisdictions, there's a good chance they'll get acquired. Something will happen. It could be dodgy CEOs, whatever. So there's plenty of countries around the world, relatively safe, benign, like UK, for example, US. So I won't go to places like Africa. I mean, there's enough risk as it is. Number 5, last one. One but last. Trading or punting. If you look at spread bets, IG index, 75% of all retail investors lose money. That's 70. So if you're going to go on there, what makes you think you're better than the pack? Either you've got a lot of experience. If you're new, you think you make money, spread betting, you're probably wrong. So don't even go there. Don't mess around with those kind of odds. They're odds against. And the last one, and also punting, it's low-level conviction gambles, basically. Some people, I have a punt on this. They haven't really researched it. Research it, and if it's good, go in with a bit more conviction, and you can earn more. But if, don't say, I don't know about this, and it goes wrong. Most punts I ever had went wrong, because I don't really know anything about the company, or the business. And the last one, Steve, you should know this, the last risk of all, we've all got this issue. What do you think it is?
Overexposing. Have we done that?
We've done that, Stephen. What you've done there, you've overexposed exposure.
Yeah, that was the first one, wasn't it?
Yeah. So last one I've done is your emotion. The more emotional you are about share price movements, the less likely you are to make consistent returns. Sometimes this is because you're overexposed. If you are overexposed, actually, that makes you more emotional in stock, because it starts going down. You probably sell at a loss then because it's going down. So I said, making decisions based on your emotions, i.e. anger, fear or greed, are more likely to be impulsive and not well thought out. If you sell an improving business, just because the share price goes down, your emotions are in control. And again, if you buy a business just because the share price goes up, Your emotions in control. Make decisions based on business operations, not the share price movements.
Do you think that is a skill you build? Because I've been investing now, and I use the term investing very lightly, for about 7-8 years now. And actually that, I think, gets better every year. And certainly at the moment, like normally I would have been panicking like hell now. And I think now I'm kind of like, no, I'm fine with this. I understand how this all works now. Whereas probably a couple of years ago, I probably would have been having minor heart attacks every day, I think.
Yeah, it's like anything, humans, I suppose, they get a bit blasé with, things crack on. I remember putting money into stocks years ago. I thought, at the time, that was massive amounts of money. Whoa! Now it's like a pittance. I think, so what? But it's like getting on a roller coaster ride for the first time. In a big roller coaster, you're on I'm scared of this. Go on there. If you have 10 rides on it, by the 10th ride, you just look at your phone, while you're on the roller coaster. It's not a big deal.
Well, do you know what's funny? When I did start, I remember what was the stock that I got in at it's the one I massively, they got delisted.
New World Oil and Gas.
New Oil,
that's the
one. Yeah. So I put a fair whack into that, and I remember it going up by, within a couple of weeks, it went up by, it went up by about $4,000. And I was like, oh my God, literally over the moon. And I remember it said, whatever happened, it pulled straight back and went right back down to naught.
Yeah.
And I just remember for about a week, I just kept having like those like moments going, I could have cashed out at $4,000 there and I just lost $4,000. I was devastated. Whereas at the moment in the market, if my portfolio drops by $4,000 in a day, I'm like, just another day in the market, isn't it?
Yeah. And also now, though, right? I mean, it is an experience, isn't it? And you learn about things. Like when I first started years and years ago, I literally was, in fact, in the .com bubble. I didn't know anything about companies. I'd read a little bit, something, but I chucked some money in. It would double overnight, and then it would sink below that, and I'd lose money on that. What's going on? So I got into the mentality almost of trading because I didn't do enough research on companies, so I was scared about it. I didn't know about them, so I jumped in and out like a maniac, scared of every price movement. Now, because I keep a track on the businesses themselves, their operations, I think that's fine. It's fine, nothing to worry about. It's going well. It's like now I see people. So
Well, and it's funny though, if everyone did that and stuck by that. Can't think of the word I'm looking for, but the whole stock market would be so much better, wouldn't it?
It would be less volatile, I know. But
less volatile. Yeah. It would go up when it's supposed to go up, and it would go down when it's supposed to go down, but
there'd be less volatility, there'd be less sort of extremes, boom and bust. So exactly, and there'd be more smooth return. But I suppose that's it. But that's all because of emotion, though. It's like
human emotion, exactly.
Because people. I know. There's been a bit of wrangling and all that, but and arguments and heated discussion in the Gfinity channel, on Discord, the chat group there, and some people are annoyed. I understand that, and selling, but I said, listen, you've got to take your emotions out of this because I've taken a knock. It's gone down by 50%, but this is what I thought. I said, right now. It's at a valuation of 15 million market cap. GDM on its own, if esports digital media companies are valued 5 times sales, so GDM on its own is worth that. And now they've got like 3 million of cash to get to profitability, and it's at an all-time low. This is not where you sell. You don't sell at an all-time low. You buy. Now people are selling because they're emotional, and I understand that, but that is not the way to make money. Because if you're going to doing that, get really emotional about stuff. Like I said, businesses are volatile. Amazon has dropped 90%. Facebook did 40% drops in 2 months in 22. How much? What else has gone? Apple has done like 50, 60% drops. It happens with all businesses. And when you're a startup, you do need access to capital. Things don't go smoothly. You have a couple of delays, and it does mess you up a little bit for a time. But now it's one of the safest places ever been. Gfinity. It's literally it's got cash. That's the biggest worry of all, except for any business. No cash. They've got cash. John has said over and over again now. And this, people would judge John on this. We will get the profitability on this cash, right? So we are at a low valuation. There's growth in the areas they need growth in, and they've got cash to get there. So, again, if you would you invest at this level now? Yes. Now, if people have taken a hit, I understand they don't want to get in, but if you just look at growth, value, and cash. It's a slam dunk, from here. So it's working, So
out of all our stocks that we own at the moment, our big ones, if someone came to you and said, "Look, obviously I'm going to put some money into a fund because, just it's nice and safe. Not proper investors. Someone just wants to, and someone wants to have a little bit of a not a risky one, but like what we've got. Which one would you say to put money in at the moment? Because obviously they're all good buys at the moment, aren't they? So which is the one stock you go, this is probably the one I would probably have a bit of fun with?
Yeah, well, it's hard to say because, like I say, I hold them all for a bit of a balance, and I wouldn't recommend any one stock.
Over another one, yeah.
Because there's a bit of diversity there, so I find it hard. Now, if you look at risk reward or safety, if someone said I don't want anything too crazy, I said, well, I don't want to invest in oil and gas stocks anyway. But I mean, if you're looking about getting to profitability first, then it's going to be XPF. They are creating cash now, so that's the one I look at. First and foremost, but it's a little bit bigger than the other. What was it? Well, Truefin's bigger market cap. But I don't know. I'd have to say, do you know what? I literally, in fact,
I guess it depends on how much money you're putting in. Because if you have enough, you would probably go actually put a bit in all of these, as you said. But I guess. And
also,
it's a question someone asked me this week, and I was like, I don't really know, to be honest. They're all pretty good value at the moment.
In fact, time horizons wise, right, it depends again how long you're going to put in for. But I'd say for a safe scalable sort of that's why I like the XP Factory, because it's not like a software scalability. No, I understand it's not a Truefin scalability, but they're already generating cash, and I can see them being worth a lot more. In a year or two time, and predictably so. They've got a runway of properties they're opening up. Like Oxford Street's going to be mammoth, but they're already generating cash, so they're a safe play. They don't need to go to the market for cash. They're profitable, and you can see it. For an everyday punter like your mates, whatever, you can go in a boom battle bar in Cardiff and look at it. You can try an escape room. And he'll say, I like this, and I genuinely think this is the start of Richard's very ambitious, and I think. I wouldn't be surprised if they take a couple of years, maybe a year down the line, a couple of years of exclusivity, buy flip out, and it becomes a lot bigger. And it gets to the stage where they start paying dividends at one point, because that's what I think it'll be. So, so I think that's more developed than anything else. But but if you're at high risk, I think there's less risk now for like Plarian, for example. Again, the FDA is a black box. You know what's going on in there. So, but I'd say that as an opportunity to really rally. If they get the FDA approval, it goes nuts. If you want a bit of blood and guts.
Oh, will it? I don't know.
In this market, I know. But no, I think it will go back to that quid. When literally it'd be one of the things that just shoot up. I also think Gfinity, as soon as the churn of the issued shares goes, I think it's going to get. I think that'll rise quickly. Because what happens, people will sell. People go. By the way, did I tell you I took part in the fundraise?
In Gfinity?
Yeah.
So I didn't know that.
Yeah.
What was the price anyway?
1.25. I didn't have a lot of money though, but and also scaled back anyway. Now,
what was that below the current price?
Yeah, no, it's above the price. Yeah, so where we at now?
What was the percentage discount?
It dropped 50% anyway, isn't it? The discount wasn't massive at all because it was like 3% because it already dropped by 50% anyway. So, but no, 1.25 is the placing price of 1.475 now. I think once the churn, so because some people I will not. They get warrants, 1-for-1 warrants. You have the option to buy shares in 1.25 up to a year from now. That's expiration date is a year from now. So some people, what they do is get the shares, they're placing shares, they sell those. So for example, let's say you invest 10 grand worth of shares on G50 placing, right? 1.25. So they come to the market and say now 1.4, they're at 1.475. So you can sell those for a profit, right? But you've also got the option to buy another, say, 10,000 worth of shares or whatever you bought within a year's time. So if it goes up to 6 pence, you can be buying them at 1.25 pence, and you can turn that over very quickly for profit. That's the thing with warrants. They're very good. But so Gfinity has raised 2.7 million in placing shares, but also it's 1-for-1. So every one of those shares you get placed with, you get a warrant. So that means they've doubled that raise really just for warrants. So they've done about let's say 2.5 net they've raised. So they've got about £5 million for that raise. So that's why they're good for cash for a long time now. So yes, it Oh, there we go. But well, let me know. Who is the friend? Can you like to mention his or her name?
His name's Ben.
Ben. The two of us need look no more.
But he's only quiet at the moment. And annoyingly, I know he wants to put money into a fund as his main thing.
That's good. I said on the webinar today, so if you're new to investing, I would put like 60% in a Vanguard fund, like and then the other 40%, like 10% each in a smaller cap company. But look at tell them three things, Steve. Three things to look at. Say, has it got growth? Because you invest in a growth stock, and I look at 20% in a top line revenue year on year. What's the valuation on it? Is it highly valued? Because that's very risky, In fact, I did skip over that slide just then. But a high valuation is very risky, especially if that valuation is based on, sort of really ambitious forecasts. If they miss a forecast, the share price will come down crashing. So always get good value. And then, where are they? Are they profitable? Are they going to get the profitability? Do they have enough cash to get there? Where are they? So those three things. But if you're looking for the safest one, I suppose, now in my portfolio, and very, like I say, I think it's XP Factory because it's like I say, it's profitable, just generating cash. So,
yeah, to be honest, I don't tend to want to encourage friends to go into more of those kind of stocks like.
No, I don't. But I do. I say this is what I'm doing. This is what I'm in.
These are the reasons. This is what I'm doing. I wouldn't recommend it unless you want to do your own research and look into it yourself, obviously. But with the funds, I'm like, well, you kind of look at the graphs and you go, they're pretty self-explanatory, really. You put money in it, and over a long period of time, you'll make money. It is generally kind of how they work, isn't it?
Yes. But all the stocks I own are fantastic. Just say that. I own the best 5-6 companies in the world. Brilliant for the value. They're all the best. Can't get about that. So they're all fantastic. But on their own, it's hard to pick out one because, like I said, there's a bit of balance there, and there's different sectors there that I've on purpose. Marvellous. Anything else, Stephen? You watched anything this week?
Do you know what? No, I haven't watched. I was saying to you off the podcast before I came on, I watched the new Batman film last night, which is 3 hours long, like one of the longest films I've watched in a long time. But do you know what? I was dreading it a little bit when someone said it was 3 hours. They're like, oh no, it's one of those films that, it's a really good 3 hours, it's like jam-packed. And I was like, okay then. Yeah, it was all right. I think they bigged it up to me so much, so I kind of went into it a bit over expectations of it. But it's worth watching. But yeah, strap in though, 3 hours long.
I'm not going to do it. I just can't stop that. I don't like fancy nonsense anymore. Because do you know what? I'm 51.
Yeah. But I really liked the previous trilogy of the Batmans with Christian Bale. I think they were brilliant. But this, because they got Robert Pattinson, the old Twilight star guy. He's now the new Batman. Played Batman very well, but as Bruce Wayne, they got it completely wrong. Like he was almost like he had long hair. It was almost like a teenager, like playing like Bruce Wayne. It was like it just didn't work at all. Good. It was a good story. It was just overhyped, I think, for me. So go in with lower expectations, and you'll probably like it. Yeah.
I won't go in at all, thanks.
No, okay, there you are.
Like I said, my recommendation is that they're the old what's it called? The old we crashed. Yeah, we worked. But I just started watching that on episode 2. It's late last one.
Tell you what, one thing I did watch last night, I binge watched the last season of Drive to Survive on Netflix. I'd highly recommend that. Even if you're not into Formula One, it's a very good season to watch. In fact, it's actually kind of got me into Formula One. I almost subscribed to Sky F1 this week, and then I realised it was £18 a month, and I was like, yeah, maybe not. I'll just watch the highlights.
Yeah. Well, do you know what? It's like that. Monty, right? He's a Spurs fan, and it's annoying because we're trying to find. He wants to watch, but he's not. He's watched the odd Spurs game, And look at it. He's thinking. So it's just for the Spurs games. It's hard to even just get that. So it's literally £20 a month.
25 quid, yeah.
You've got
to get the full thing, haven't you?
I know, it's like so annoying, isn't it?
Well,
can't Spurs do something with that? Just say we do our own streaming channel.
I think it will start coming to that, but the problem is they're all locked into these Sky deals because as soon as they start going off and doing their own one, suddenly the Sky deals probably become less valuable then, doesn't it? So But it is annoying. Right, at least with Sky Sports, I think it's about 25 quid, isn't it? But at least you get all the Premiership games, and I don't know enough about football, but you get everything. Whereas Formula One, it's £18. You get one channel, and it's pretty much 2 races a month. You go, wow. Oh, that's a lot of money, isn't it?
Yeah. And that's why they paid ridiculous amounts of money. It's nuts.
Yeah.
Cool. All right, Stevie. Well, have a nice weekend. Any plans, Steve?
Well, Wales are playing today on Saturday.
Oh, we should win that. It's Italy.
It's Italy, yeah. If we don't, we're really something going wrong.
Yeah.
But yeah, so midday, I am live from the capital with Capital FM.
Live from the capital, Steve Bonin.
Well, not me, obviously.
No, I'm in the background.
I'm doing the tech side, so yeah,
cool.
I have to do that today.
Marvellous. Right.
And also worth mentioning, we're doing a live. Well, I think so. Anyway,
Yes.
We're doing a live
live webinar
weekend podcast next week.
Yeah,
next Saturday.
Yeah, but I think
live from Southampton.
Yeah, well, close to. Yeah.
Well, thereabouts.
Yeah, cool, marvellous. Right, speaking next week.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.